My name is Matt Swart. I cover the IT stocks and resources for PSG Wealth. And in today's presentation, I'm going to go over our most recent report on the resources stocks, which covers Sibanye, Implats, Amplats, BHP, Anglos, and Rio. Our report splits the miners into two groups, the PGMs and the Diversifieds. The PGMs are primarily exposed to the platinum group metals, that's platinum, palladium, and rhodium, the main application of which is used in the auto industry and catalytic converters. And then the diversified miners are exposed to a variety of metals. The biggest one across all three of them is iron ore. We are concerned with high margins, the high level of earnings across the sector, which we believe has been earned on unsustainably high prices. And given that the demand drivers like China are slowing down, we are also quite concerned with iron ore and coal prices. Lastly, I'll show the composition of the producers and then finish off with our valuation, which leads us to prefer Sibanye and Rio for the PGMs and Diversified respectively. So this graph shows the historical average EBITDA margins across the sector. Record margins were achieved in 2020-2021, given the high commodity prices. Generally, for these companies, you've got costs which are increasing over time. So the more you mine and the deeper you mine, the more expensive it becomes. You've also got wages, which are quite a high portion of costs, and they're also increasing. So basically, you've got an increasing cost base and you've got products for which you can't control their prices, and margins are at 20-year highs. We think there are a number of factors that will lead to lower commodity prices and put downward pressure on the margins. Earnings have been so high above trend that we think it is more probable that they will come down to more sustainable levels. And this chart shows that the record level of earnings across the resources has been quite high. We think that the level of earnings is unsustainable given the numerous macro pressures which will probably drive commodity prices lower and causing earnings to move toward the 20-year trend. Also shown in this chart on the right-hand side is the PE and EV/EBITDA multiples, which indicates that Amplats is the most expensive, followed by Implats, followed by Sibanye. And then this is a very similar chart to the previous one. It just shows the geographical split. So Implats and Amplats have a very high concentration to Southern Africa exposure. That's mostly South Africa and Zimbabwe, whereas Sibanye has got about a third of its revenue exposure coming from an operation in the United States. So for me, this is one of the reasons I favor Sibanye over the others. It's more geographically diverse, more operationally diverse, and it's the cheapest out of the three. Just moving on to the diversifieds quickly, you can see that the companies are a lot more diversified than the PGMs. They've all got quite a large exposure to iron ore and copper, but BHP's got quite a large exposure to coal, so that's about 25%. And remember, iron ore and coal is what is concerning to us. So now, just lastly on the valuations, pretty much value all of them the same. For all of the companies, we try to forecast the EBITDA based on guidance provided by management. We assume that they will produce the target volumes that they set out. We keep the current EV/EBITDA multiples the same, which are generally at the all-time lows. And then we flex the bull, bear, and base case scenarios based on the forward prices of commodities. So the base case, we use the consensus, and then we adjust the bull in the bear case upwards and downwards, which provides us a range of outcomes. And the range of outcomes helps us to make our call. So our calls are basically as follows. From the left to the right, we've got Anglos, which we've got a buy on, Rio is a buy, BHP a sell, Sibanye a buy, Implats a hold, and Amplats a sell.
Thank you very much for joining us today.